It's funny. We wouldn't dream of skipping an annual physical, right?
Yeah, right.
Or like letting your car completely miss its oil changes for years.
Yeah, exactly.
Well, our finances kind of need that same regular check-in. That's really what we're digging into today, this idea of an annual financial checkup.
Think of it like a tune-up for your money. It's a chance to spot potential issues before they become, big problems.
Exactly. And this isn't about needing to become some kind of financial genius overnight.
Not at all. This deep dive, we're aiming for it to be a shortcut, really, to help you understand why this annual review is so important and, crucially, how you can actually do it effectively.
Our mission here is to pull out the really useful, practical stuff from the annual financial checkup article. So you walk away feeling more in control, ready for the future, but not like totally overwhelmed by it all.
Definitely. And it's more relevant than ever, wouldn't you say?
Oh, absolutely. I mean, think about the economic ups and downs we've seen.
Yeah.
The 2008 crisis, then the pandemic more recently.
For sure. Plus, you've got the rise of the gig economy, more people juggling different income streams.
Right. And the whole retirement landscape has shifted. Fewer traditional pensions, more reliance on things like 401ks, those employer plans, and IRAs, the individual ones.
Which puts more responsibility on us individually.
It does. And the article we're looking at actually makes the case that right now, like mid-2020s, is a really great time to build this checkup habit.
It's a perfect time.
So, okay, where do we even kick this off? What's step one in this financial checkup?
Well, the article smartly starts right at the foundation, getting a really clear picture of your income, your spending, and your budget.
Okay.
It really just boils down to that fundamental question. How much money is actually coming in and where is it all going?
Makes sense. That understanding is kind of the bedrock for everything else. Right?
Precisely. All your other financial decisions really build on that foundation.
Okay, so let's dig into that a bit. Income and spending, what are the key details we should be looking at?
The article lays out a few key areas. For income, it's not just your main salary. Think about everything: side hustles, freelance gigs, maybe rental income.
Dividends from investments, too.
Yeah, exactly. All the streams coming in. Then, on the spending side, it helps to break it down. You've got your fixed expenses.
Like rent or mortgage, insurance, utilities. Subscriptions seem to be a big one now.
Definitely. Those predictable costs. And then you have the variable expenses, the ones that fluctuate more.
Groceries, eating out, transportation.
Right. And crucially, don't forget debt payments. Credit cards, student loans, car payments, they all need to be factored in.
And the article suggests using tools for this, like apps or spreadsheets.
Yeah. Using budgeting apps or even just a simple spreadsheet can be incredibly helpful. Lets you see the patterns over time, compare month to month.
I bet seeing it all laid out like that can be a real eye-opener for some people.
Oh, absolutely. It can be a bit of a wake-up call.
So what are some practical tips the article gives for making this budget review really work? Not just looking at numbers, but making it effective.
It offers some great, actionable advice. First, try to categorize everything. Even those, small daily coffees, they add up.
They really do.
Second, look for what the article calls leaks. Things like unused subscriptions you forgot about, or maybe way more spent on takeout than you realized.
The sneaky spending.
Exactly. Also, think about seasonal spending patterns. Holidays, back to school, things like that. Plan for them.
Good point.
And finally, be ready to adjust. Your budget isn't set in stone. Life changes, a new job, maybe a family change, so your budget categories need to adapt too.
And this isn't just like good advice. The article backs up with some data, doesn't it? The stat spotlight.
It does. It cites a 2024 bank rate survey, and it found that 56% of Americans actually don't keep a budget, which is pretty surprising.
Wow, more than half.
Yeah. But here's the interesting part. Those who do budget consistently say they feel more financially stable.
That really tells you something, doesn't it? Just the act of knowing where your money goes gives you a sense of control.
Exactly. It speaks volumes about the power of awareness.
Right. So step one is getting that clear picture of income, spending, budget. We've got a handle on the money flow. What's the next critical piece of this annual checkup?
Okay. Next up, the article dives into assessing your debt and your overall credit health.
Debt.
Okay.
The article frames it as potentially useful, but also a trap.
Yeah, a dangerous trap is the phrase they use. It can be a tool, like for a mortgage or education, but it needs careful management. The key is evaluating if your debt load is sustainable and how it's affecting your other financial goals.
So when we're doing this debt review, what specifically should we be looking at?
You want a clear picture of the total outstanding balances across everything: credit cards, student loans, car loans, personal loans, you name it.
All of it.
All of it. Then pay really close attention to the interest rates, especially high interest debt like credit cards often have. Is there an opportunity to consolidate that into something with a lower rate?
Good question. And what about payments?
Right. Are you just scraping by with minimum payments? Or do you have a strategy to actually pay down the principal to make real progress? That's a crucial assessment.
And credit reports and scores, that's part of this too.
Absolutely essential. You need to check your credit report regularly, look for errors, make sure there's no sign of identity theft, and of course, know your credit score.
That checking the report thing, I feel like it's something people mean to do, but maybe falls off the radar.
It often does.
Yeah.
Which is why the article includes that really handy pro tip.
Yes, the free reports.
Exactly. Reminding everyone you can get a free report from each of the big 3 bureaus, Experian, Equifax, TransUnion, once a year. Just go to annualcreditreport.com. It's a resource everyone should use.
Definitely. No excuse not to, really.
Right.
And they had an example to make this debt consolidation point clearer, right, Sarah?
Yes, the example of Sarah, the freelance designer. She looked at her finances during her checkup and realized, wow, she was paying over $200 a month just in credit card interest. Big ouch. So she consolidated that high-interest debt into a personal loan with a much lower rate. And the result, she saved over $1,800 a year.
Wow, that's significant. That really shows the tangible benefit of tackling that high-interest debt.
It really does. It's not just theoretical savings.
And it's not just about saving on interest payments either. The impact of credit health is broader, isn't it? There was an expert insight on this.
Right. They brought in credit expert John Ulheimer. His point was that your credit score affects way more than just getting loans.
Like what?
Well, potentially job prospects, your ability to rent an apartment, even how much you pay for things like car insurance or homeowner's insurance.
Huh. Okay, so it really touches a lot of areas of your financial life.
It's pretty fundamental, yeah.
Okay, so we've covered income and spending, then debt and credit. What's the third major area for this annual financial checkup?
The next crucial step the article highlights is evaluating your savings and especially your emergency fund.
The emergency fund. Financial safety net.
Exactly. That cushion you need for when, life happens. Unexpected expenses always pop up.
And the stats on this aren't great, are they? I remember reading something about people not being able to cover small emergencies.
Yeah, the article mentions a 2025 NerdWallet report. It found nearly 40% of adults said they couldn't cover a $500 emergency expense.
Wow. 40%, that's concerning.
Yeah.
It really shows why that fund is so critical.
Absolutely critical.
So when we review our savings as part of this checkup, what specifically are we looking for? Is there a checklist?
The article offers a nice little checklist for savings review. First, obviously, check the balance in your emergency fund. The common guideline is aiming for 3 to 6 months worth of essential living expenses.
Essential expenses, key point there.
Right, not your total income, just what you absolutely need to cover. Then think about where you're keeping that money.
Not just in a regular checking account, ideally.
Ideally not. You want it somewhere safe and easily accessible, but also earning some interest if possible. A high-yield savings account is often a good option.
Okay, and accessible is important too, right? For emergencies.
Crucial. You need to be able to get that money quickly if something comes up without penalties or delays.
Makes sense. And beyond the emergency fund, what other savings goals should we be reviewing?
The article suggests looking at savings across different time horizons. So short-term goals, maybe a vacation, saving for car repairs, paying tuition soon.
All right.
Medium-term goals, things like saving for a down payment on a car or maybe a house.
Okay.
And then, of course, the big long-term goals. Retirement is the main one for most people, maybe saving for kids' education too. You want to check your progress on all of those.
And is there a tip for actually making progress on those savings goals?
Yes, a very practical savings tip. Automate it.
Pay yourself first.
Exactly. Set up automatic transfers from your checking to your savings accounts right after you get paid. Don't wait to see what's left over.
That makes saving a priority, not an afterthought.
Precisely. It really ties into that Dave Ramsey quote they included.
Oh, yeah. What was that one again?
Saving shouldn't be what's left after spending. It should be the first priority. Automating it is how you put that into practice.
Love that. Okay, so income, spending, debt, credit, savings, emergency fund. We're building a really solid picture. What's layer 4?
The next important area to tackle is revisiting your investments and your retirement plans.
Okay, investments. The article makes a point that this isn't just set it and forget it, right?
Absolutely not. That's a key takeaway. Your portfolio needs regular check-ins. You need to make sure it still aligns with your goals, your comfort level with risk, and, what's happening in the broader market.
So what are the key things to review when looking at investments?
Well, first, how is your portfolio actually performing? Compare it to relevant benchmarks to get a sense of whether it's on track.
Yep.
Then look at your asset allocation. That's the mix, right? Stocks, bonds, maybe real estate, other things. Is that mix still right for your age, your goals, your risk tolerance?
That mix can change over time, right?
It generally should, yes. You also need to review your retirement contributions. Are you putting in as much as you can or should into your 401k or IRA?
And especially, are you getting the employer match?
Yes. Critically important. If your employer offers a match on your 401k contributions, make sure you're contributing enough to get the full match. It's basically free money. Don't leave it on the table.
Cannot stress that enough. Free money.
Exactly. And finally, consider your tax strategy. Are you using Roth versus traditional accounts effectively? Thinking about how capital gains might impact things.
It feels like this part can get a bit more complex for people. Does the article mention any tools or trends that might help here?
It does. It points to the increasing popularity of robo-advisors.
Like Wealthfront or Betterment?
Exactly, those kinds of platforms. They can automate things like rebalancing your portfolio back to your target allocation, and even do things like tax loss harvesting, which can be quite beneficial. It can be a good option for people who prefer a more hands-off approach.
And there's another case study here too, wasn't there? To illustrate the rebalancing point. Omar.
Yes, the case study of Omar. He did his checkup and realized his portfolio was really heavily weighted towards tech stocks.
Concentration risk.
Big time. So after talking with an advisor, he decided to diversify more, adding things like international funds. And the result was it helped reduce the overall volatility, the ups and downs in his investments.
A good reminder about not putting all your eggs in one basket.
Definitely. Diversification is key.
Okay, we're getting towards the end of the checkup list. It feels like we're moving from the pure numbers now to the bigger picture stuff. What's the final stage?
The last, but certainly not least, critical area the article covers is updating your financial goals, your insurance coverage, and your estate plans.
Right, because life doesn't stand still.
Exactly. Things change, your job, your family situation, your priorities. So your financial roadmap, your documents, your protections, they all need to keep pace with your actual life.
So breaking that down, financial goals, what should we be reassessing there?
Ask yourself, are the goals I set last year or 5 years ago still realistic? Are the timelines still right? Have my priorities shifted? Maybe you need to save more aggressively now, or maybe invest more.
Or maybe new goals have cropped up, like starting a business or planning a wedding.
Precisely. You need to make sure your plan reflects your current reality and aspirations.
Okay, and then insurance. That feels like something people might set up and then forget about.
Very common. So the article recommends doing an insurance audit. Look closely at your health insurance coverage, deductibles, premiums. Does it still meet your needs? Is it competitive?
And life insurance too, right? Especially after big life events.
Absolutely. Getting married, having kids, those are major triggers to review your life insurance needs. You might need more coverage. And also check your home and auto policies. Are the rates still good? Is the coverage adequate? It pays to shop around sometimes.
Good advice. And finally, the part maybe people like thinking about least, but it's so important. Estate planning.
Crucial. The estate plan check is vital. This means reviewing and updating your will. Make sure your beneficiary designations on accounts, retirement accounts, life insurance are current.
Yeah, those beneficiary forms often override what's in the will, right?
They often do, yes. So check both. Also, consider things like a power of attorney for finances and a healthcare directive or living will. Who makes decisions if you can't?
Important documents to have in place.
Very. And depending on your situation, maybe setting up a trust makes sense for asset protection or inheritance planning.
And the article had a pretty sharp quote about the urgency here, especially post-COVID.
It did. From estate planner Maria Givens. She basically said, if you haven't updated your will since before COVID-19, you're overdue.
Wow. That's direct. But it makes sense. A lot changed for many people during that time.
A huge amount. It really highlights the need for regular review.
So this whole annual checkup process, it sounds incredibly valuable, super thorough, but the article also hints at, well, a lot of people just don't do it. Why do you think that is? What are the barriers?
Yeah, it touches on some common hurdles. One big one is just feeling overwhelmed. Finance can feel complex, jargon-filled.
Totally.
Lack of time is another huge one. People are busy. It's easy to push this kind of task down the list. There can also be emotional factors. Maybe feeling embarrassed or regretful about past money mistakes makes people avoid looking too closely.
That makes sense. Avoidance.
Yeah. And sometimes it's just a false sense of security, Things seem okay. Why dig around?
But the article does offer ways to get past these hurdles, right? It's not impossible.
Not at all. A key strategy is breaking it down. Don't try to do it all in one weekend. Tackle it in smaller chunks over time.
Manageable steps.
Exactly. Using tools helps too. Checklists, apps, templates can provide structure. Having an accountability partner, maybe your spouse, a trusted friend, can also make a big difference.
Good idea.
And of course, if you're really feeling stuck or overwhelmed, there's no shame in seeking help from a professional, like a certified financial planner.
Absolutely. So let's wrap this up. Bringing it all together, why is this annual financial checkup really so crucial for you, our listener?
Well, fundamentally, your financial health isn't static. It's always evolving. This checkup is your regular opportunity to make sure you're making informed choices, that you're staying on track with your goals, whatever they may be. It helps you adapt.
It builds confidence too, doesn't it?
It really does. Whether you're focused on building that emergency fund, tackling debt smartly, or making sure your retirement plan is working hard for you, this review gives you that sense of control. It's about feeling secure about your financial future.
So the big takeaways from our deep dive today: make time to review your income, spending, and budget. Get a clear picture of your debt and credit health. Evaluate your savings, especially that emergency fund. Revisit your investments and retirement plans regularly. And don't forget to update your goals, insurance, and estate plans.
That's a great summary. It sounds like a lot, maybe, but broken down into those areas, it's much more manageable.
Definitely. And the most important thing:
it's just starting. Take that first step. We really encourage you. Gather up your statements, block out even just a little bit of time, and do your own financial checkup. Think of it as a real investment in your future peace of mind.
Well said. And maybe a final thought for everyone listening, building on those barriers we talked about, feeling overwhelmed, not having time. Considering those challenges, what's maybe one small concrete step you can commit to taking, like today, to start getting more control over your financial well-being? Just something to think about